Okay, here we go, we're live. Good afternoon, everyone, and thank you for joining us today for the first Prime Philippines webinar of the year, 2020 Real Estate Wrap-Up and 2021 Forecast. So again, thank you to all our attendees who are already here and for everyone who will shortly join, I'm sure. Okay, so this afternoon, we are joined by some key industry leaders. We'll be discussing the events of 2020 and also how 2021 could possibly fare in relation to the country's economic and business performance. So our program will start with a series of presentations. This will be covering the economy, business investment outlook, planning and design, and commercial real estate also. The presentations will then be followed, during which we will also be answering some questions from you, the attendees. So, before we get on with the presentations, I'll just give a quick introduction to today's speakers. For that, I would, like to introduce Mr. Nicholas Mapa, a senior economist from ING Bank, Manila. He joins us today. Hi, Nicholas.
Good afternoon, Connor. Thanks for having me.
Thanks. It's a pleasure. Thanks for joining us. We also have with us OIC Director Lanie Dormiendo from the Philippine Board of Investments. Lanie.
Good afternoon, everyone. Hi, Connor.
Hi, Lanie. Thanks again so much for joining us today. We also have here with us Prime Philippines VP for Property Advisory, Mr. Cholo Florencio. Cholo, how are you?
I'm good, thank you. Good afternoon, everyone.
Good afternoon, Cholo. Thank you also for being with us here today. And yes, last but not least is architect Palafox, who is currently just away from his screen at the minute. Maybe something has come up there. So hopefully Mr. Palafox will join us anytime soon. And we can begin the presentations. So I would also just like to point out on the side of the screen you will see a tab which says polls. So if you can see along, kindly look to the side of the screen, you'll see the polls tab. This is where we'll be posing, you guessed it, poll questions to the attendees, for you guys, the audience at home, so you have the chance to get involved today by answering them. I will also be potentially drawing some questions later from these, analysing some of the answers we have. I can see already the answers are coming in here for our first poll of the day. Which location are you most likely to invest in the short to medium term? So, of course, a very important question, but please get involved on the side so we can see everyone's contributions and we can all analyze that a little bit later on in the program. Okay, Architect has just joined us also. Architect, we are live, so welcome. Thank you for joining us. Okay, so now that everyone is here, we can continue already with the presentation, and we'll start with Mr. Nicholas Mapa, as I introduced earlier. Nicholas is a trained economist with a passion for economic development and nation building. He has extensive graduate training in both industrial and development economics, and has several years of research experience in both academia and the government. Previously, he was a research assistant at the University of Asia and the Pacific, research analyst at Central Bank of the Philippines, and an economist for the Bank of the Philippine Islands. And at present, he is a senior economist at ING Bank, Manila. Nicholas also holds a master's degree in industrial economics, a bachelor's degree in the arts and humanities from the University of Asia and the Pacific, and he earned scholarships to complete a master's degree in economics from the Vanderbilt University graduating cum laude and an MBA from the Kelley School of Business at Indiana University. So as you can see, a very extensive credentials there for our first speaker, Mr. Nicholas Mapa. We're very, very excited to have you here with us today, Nicholas. And without further ado, you can begin your presentation.
So good afternoon, Connor. Thank you for the invitation again, and good afternoon to everyone. I do have to apologize. I think next door we have quite a bit of construction going on, so if you hear some background noise, I will try to talk over all that drilling that seems to be happening next door. But yeah, so my job, so I'm Nicholas Mapa, senior economist at ING with coverage of the Philippines and Indonesia. I'm also Filipino, so I do like this assignment quite a lot. So my job this afternoon is to at least give a sense of what's happening. Okay, try to figure out where my slides are. But yeah, so my job this afternoon is to give the outlook for the economy. Basically, we all know how the COVID-19 crisis has affected us, maybe from a personal perspective, so as an economic perspective. But basically, what I wanted to show this afternoon is how COVID-19 has affected the economy and what we can expect in the coming months. But anyway, so we all know how COVID-19 has sort of affected the economy. The Philippines, right before COVID-19, was one of the fastest growing economies in the region, in fact, in the world. 6.2% average growth since 2014, quite admirable feat, I'd have to say. But of course, we pretty much hit a brick wall with COVID-19. And what I wanted to show in some of the slides is that prior to COVID-19, the economy was pretty much a 4.9 trillion peso economy for the fourth quarter of 2019. And then with COVID-19 and all the restrictions that we've had to sort of deal with, okay. Well, anyways, the slides don't appear to be in order, but what I did want to show is, first of all, GDP had fallen from a perspective, just to get some perspective, fell all the way back to 2016 levels. Now, just understanding that all the economic gains we've made over the past 3 years pretty much wiped out by this pandemic. So if you ask me the question, will we see growth this year? I think the short answer to that, of course, is yes, we will. Mainly because of the base effects. We had fallen all the way to 2016 levels of growth or income. So any sort of improvement from that will see positive growth. So the short answer to that is yes, we'll see growth this year. In fact, we might even see some very startlingly good numbers, forecasting about 14% GDP growth in the second quarter of this year. However, I think the more important questions that we have to ask ourselves is, when do we get back to the same level of GDP or income that we saw prior to COVID-19? So when do we get back to 4.9 trillion pesos per quarter? That's the more important question. And I think another important question is, will we ever get back to that 6% GDP growth pace that we're so used to? Prior to the pandemic, you probably hear the authorities telling you that we were in a position of strength, that we were growing very rapidly. But because of COVID-19, we're now experiencing the worst contraction or recession since forever. This is the worst economic performance we've had on record. So the question is, the two more important questions I feel is, when are we going to get back to 2019 levels of GDP? And what is the pace of growth post 2021? So I think what will be very useful is to, okay, so some of the slides appear to be gone, but basically what I wanted to show everyone is sort of the makeup of the economy. So the economy is made up basically of a very solid or substantial household final consumption sector. This is basically consumption of everyday Filipinos. And it makes the bulk of the economic growth of the economy. Roughly 71% of the economy is driven by consumption, our ability to go out, step out, go to the mall, get a haircut, all these things, eat out. all these things contribute to economic growth as a whole. So we can imagine if we're forced to stay at home, such a big hit will definitely be felt by the entire economy. On top of household final consumption is capital formation, or what we call investments. So investments form the second part, or the second portion of growth. And this, of course, is investments, let's say, in durable equipment, so cars, investments in real estate, construction, and maybe capital machinery if you're a firm, right? And the third sort of chapter or sector of growth is government expenditures. So one thing that I wanted to show is that the entire economy is basically built on your household consumption sector, right? So if any, just like any foundation or any structure building, if your foundation is shook or is shaken or disrupted, you can expect the entire structure to fall. And that's precisely what happened to the Philippines. We were hit by the pandemic, households took a substantial hit, and the entire structure of the economy sort of crumbled, now at negative 9.5% GDP. So authorities, of course, are saying, don't worry, we're going to bounce back this year. Yes, that's true. We will have good growth numbers. However, after 2021, I think that it will be very difficult for us to get back to the 6% growth pace that we're so used to. Here's and this is one of the slides, finally getting to the slide, talking about confidence, right? So household final consumption is our ability to spend and shop and all that. A lot of that has to do with consumer confidence, and showing you on the screen consumer confidence as measured by the BSP's Consumer Expectation Index. Basically, it's showing us here a negative 47.9 index level. And we can see prior to the pandemic, that level was averaging 1.3. So at the height of the ECQ, the number was negative 54.5. So we've made some headway in that regard. However, in terms of actually getting back to pre-pandemic levels, we still have a ways to go, definitely have a ways to go. So unless you get people confident in the economy, unless people have jobs, I think it'll be very difficult for us to expect Filipinos to go out and party like it's 2019, because right now it's 2021 and job losses are substantial. Unemployment right now is at 8.7%. Prior to the pandemic, the average unemployment level was 5.3%. So just to see the disparity and all that, yes, we've improved. However, we're still very far from the levels, the economic variable across the board from where we were prior to the pandemic. So my expectation, the household final consumption, which the entire economy is built on, is still, I guess, reeling from the effects of the pandemic. Therefore, if you don't have household final consumption, you can expect the other sectors to struggle as well. This is another slide that I wanted to show you, just sort of giving us the the indication that investments are not likely to pick up in the near term. This next indicator that I'm showing you is bank lending growth as measured by the BSP's commercial bank loans. And now, for the first time in, I think, if you go back to the entire series that the BSP has published, this is the first time it's negative. Yeah, as you can see, hit peaks of 21.1%, 13.6% just very recently in 2019. Now it's at negative 0.7. Whenever you have bank lending, that's a very good sign that your investment story is picking up. Your capital formation is going. People are buying cars through financing. People are buying houses through financing. And when you have bank lending negative, that's not a very good sign. It's a bad. It's a leading indicator. So if you see this type of trends, we can expect capital formation also to take a hit. So with this sort of prognosis, we can't expect capital formation, which is the second part of the Philippine economy, to pick up in a big way over the next few years. And here's probably why that's happening. I showed you negative bank lending growth at negative 0.7. And here's one of the reasons why that's happening. BSP, for its part, has slashed borrowing costs by 200 basis points or 2 percentage points. The borrowing rate of the BSP used to be 4%, now it's at 2%. And the reason why the BSP does this is because the banks, so your different commercial banks in the Philippines, have the option of parking their money with the BSP or lending it out. So whenever BSP cuts policy rates, the tendency or the natural tendency in normal times is that commercial banks would also cut their lending rates by roughly the same amount. So BSP cut their policy rate by 200 basis points or 2 percentage points. So they were expecting, just like in normal times, that banks would lower their borrowing costs as well. And in that regard, if they do that, that should, at least in theory, help bolster or boost bank lending. However, the opposite has happened since the crisis began. What happened, you can see here, just wanted to direct your attention to the orange line, which is the BSP's rate, and the gray line, which is the actual lending rate that we're seeing on the market. And we can see the disparity there is 400 basis points or 4 percentage points. So what's this telling us? This tells us that even if the BSP has cut policy rates very aggressively, banks are finding it very difficult to pass on the lower borrowing costs to their consumers or their customers, thereby making borrowing costs actually more expensive than actually less expensive. And the reason for that is because the increased risk in the economy right now. Banks have to allocate an additional premium, or they have to increase the interest rates because of all the threat of, because of the risks out there. So they need to tack on a little more premium because of the uncertainty in the market. The economy is in recession. So to increase just the risk premium, I guess, associated with the economy in recession, banks are now charging quite high. So it's understandable that bank lending is also falling. So banks are not willing to lend out as much because they have to allocate for the increased risk. So even if the BSP's cut policy rates, it hasn't really translated to borrowing costs going down just yet. Here's another thing that the BSP did. A lot of lines here, a very messy graph, I apologize. But basically what this slide is trying to tell you is that the BSP has flooded the market with liquidity. Because in the past, whenever BSP does that, interest rates or borrowing costs tend to go down. And in the secondary market or in the local bond market, we have seen yields fall a bit. Because of all the liquidity in the system now, just want to give you some context. The amount of extra money in the system is now 1.8 trillion pesos. This is the highest it's ever been because BSP has decided to flood the market with money. So whenever there's more money in the system, and if that tends to push down borrowing costs in the secondary market. So let's say for a firm or a company that wants to issue its own debt, if benchmark yields, if let's say there's so much liquidity in the system, that tends to keep borrowing costs down. It hasn't really translated into a lot of firms tapping the market, looking to float their own bonds. And the main reason for that is because confidence is down. So the BSP has tried to do all it can based on its tools, giving a lot of money, flooding the market with liquidity, cutting policy rates. But because the environment is so terrible, it's very difficult for even the banks to prod or to push loans. And secondly, because job losses are so high, incomes have been whittled down by about a third, not a third, maybe a quarter. It's very difficult for anyone to consider taking out a loan and, let's say, buying a new car or investing in a new property right now, because everyone, or for the most part, most Filipinos are in cash conservation mode. So maybe that investment that you're thinking of doing has been put off for another 2 years. So lastly, we can't expect the households to save the day because unemployment is very high and consumer confidence is very low. We can't expect investments to come in a big way also because there's no consumer to sell your products to. Let's say if you're a firm. We're also seeing bank lending is relatively on the downtrend because borrowing costs have remained relatively high. Even if BSP's cut policy rates. And this is the last sector that we can hope to get some growth from, and that's government expenditures. However, this graph also not very clear, but basically what I'm trying to tell you here is that the government has not been spending as much as some people would want them to. So most analysts, myself included, would have hoped to see a little more spending coming out from the government because the private sector is basically down in the mud. So in other countries, we at ING do our own analysis of the amount of spending from the governments in ASEAN, and it comes out the Philippines is the last in terms of percentage to GDP expenditure. So basically, the Philippines has not allocated enough. The government has not allocated enough to spend to prop up the economy, and we're seeing the ill effects of that right now. Basically, we're the slowest growing economy, facing the largest contraction right now. And one of the reasons I feel is because the government has not stepped up to the plate and attempted to offset all the downturn experienced in the private sector. So even in 2021, it doesn't sound like the government is raring to spend a lot of money. I think over the weekend we saw House Speaker Velasco coming out with a more aggressive fiscal package, spending package, sponsored also by, I think, Representative Kimbo, hoping to jumpstart the economy with a substantial spending bill, pretty much like what we're seeing in the US or other countries. However, it doesn't sound like the authorities are open to I guess spending the way that these congressmen would want them to. This is actually the triangle or the graph that I wanted to show you earlier. Basically, it's a triangle or a pyramid, and as you can see, households form the bottom and the foundation of the entire economy. So as we know, we talked about it earlier, households have been knocked out by the pandemic. Unemployment is rather high. If we want to look at the actual number of people unemployed, that's 4.5 million Filipinos without a job. We also have 420,000 OFWs who have returned to the Philippines after losing their jobs abroad. So that's a lot of purchasing power that's disappeared. And main reason why the households, that foundation has been shaken. And with the households, the foundation shaken, we can also expect investments to take a hit, which is the second layer of the economy. Bank lending is on the downtrend. Borrowing costs are still relatively high because of all the uncertainty. So that sector is also not expected to pick up this year or next. So lastly, government spending, the last man standing. Hopefully, maybe authorities listen to the congressmen and to analysts as well, because we're trying to tell them we need to spend a little more. This money spent today will go a long way to getting the economy jump started. So given that not so rosy picture, here's my forecast for growth. The orange line is actual growth, and then after 2021 and 2021 onwards, those are my forecasts. Basically, we fell all the way. We posted negative 16.9 GDP in the second quarter of last year. We had negative 11.4 in the third quarter, and a relatively better fourth quarter at negative 8.3. However, this year we're expecting to see some really nice growth numbers, so up to 13 or 14% GDP growth in the second quarter. However, after 2021, I'm looking at an average growth of only 4.7%, mainly because if you remember that pyramid, the households remain threatened, and then when households are down, you can expect investments also to struggle. So if that pyramid is never, I guess, rebuilt, then our economy will be stuck in low gear. Authorities, however, are more optimistic. They think we'll be growing by 8% at post-2021. But my own expectation is that because the foundation, households will still be challenged in the next few years, the entire economy is going to struggle. I like using sports analogies. So think of your favorite basketball team. If your star player is injured, you can't expect to make it to the playoffs or let alone make it to the finals. So our star player for this economy is the households. And when you have unemployment at 8.7%, you're not going anywhere. Other things that I wanted to highlight, why I don't think we're going to see fast growth next year or this year even. A lot of lines here, but I wanted to direct your attention to the light blue line. That's inflation. Inflation now at 4.2%. And what inflation does to consumption is it saps out what lever momentum is left. So there's not a lot of consumption happening right now. And when you introduce high inflation, that's going to dampen consumption further. That's going to limit your consumer confidence even more. So not very optimistic on that end. Hopefully the government can find a way to make pork cheaper, make chicken less expensive. And the only way you do that is flood the market with more supply, even if it means importing for the meantime. Inflation, I just wanted to show you that it's mainly driven by the gray portion of these columns, and basically that's food inflation. So all of this inflation that we're seeing is caused by expensive pork, expensive chicken because it's an alternative, expensive fruits and vegetables because of the storms we had in November. Now the government's asking us to switch our protein choices, but I don't know about you, but I like my tokwat baboy. I would not trade it for tokwa any day. Dollar peso. This is a question I always get a lot. Why is the peso so strong? I wanted to direct your attention to two variables here. The orange line is your dollar peso, which is currently at 48 right now. And the gray lines or the gray columns is your current account. Basically, when your current account is positive or above zero, that tells you more dollars are coming in than dollars leaving. And when that column is below zero, that tells you more dollars are leaving than coming in. For last year, 2020, because the economy was not moving, we weren't importing anything. We weren't importing oil. We weren't importing capital machinery. We weren't importing new vehicles for sale because car sales are down. So basically, we were running a current account surplus. More dollars were coming in through remittances than the money that was leaving. Therefore, the peso was strengthening. We can expect that to continue at least for the short term in the Philippines. So maybe some short near-term appreciation for the peso for the next 2 or 3 months. However, if that gray line or gray column tends lower or falls below zero, this can only happen if we start to import more. But until that happens, dollar peso will remain relatively strong in the near term. Some things I wanted to add since this is for your sector. Showing you here residential permits, which is the blue columns, and non-residential permits, which is the orange column stacked on top of the light blue column or residential. So we're seeing a substantial drop-off in both residential and non-residential permits, of course, because of the crises. And also private building construction fell, just like the economy. So we've seen a bit of recovery, and the latest figures here is for the third quarter of last year. However, as we know, we're still very far from the numbers that we used to see. Even if you compare it to 2016 levels, it's still off by a lot. So the economy, I feel you need to see those consumers come back, get their jobs again, get their confidence back up before we start to see private construction kick in, unfortunately. Another thing I wanted to show you here is bank lending to these sectors. Bank lending to construction and bank lending to real estate activities. And just like all the other lending activity, it has fallen. Now it's single-digit expansion. Still seeing some activity, but it's still very far from just a few years ago. Construction lending was up 45%. Real estate lending was up by, 30%. So until we get that, if you go back to that pyramid I showed you guys, until the construction, the foundation of household consumption is reestablished, it's very difficult to see construction, bank lending for these sectors to pick up in a big way. So my prognosis for all this, we're going to see some growth in the next few years. This year, we're going to see some nice growth numbers, but post-2021, average growth at 4.7%, not like what we're used to at 6%, but still quite decent. On investments and construction and real estate, everything depends on the consumer. If the government is able to implement, let's say, a fast vaccination program that we can all trust and have confidence in, then maybe they can repair household consumption a bit faster. If they can provide dole-outs to people who don't have money, try to put people back to work and get this economy jump-started, then maybe that's a good starting point. But until you fix the household consumption problem, the entire pyramid is going to crumble. And unfortunately, that's our economy right now. So hoping for better things in the near term. Just showing you here my forecast for these different variables. So GDP, we might see growth of as high as 13%. However, after that, it's sort of just, plateaus at about 4% after that. Inflation will start to kick in. I think, actually, I have to update this after the recent inflation numbers. Might see some months of above 4% again in the first and second quarter of this year. BSP not expected to adjust policy rates just yet. And basically, dollar peso should appreciate slightly in the near term, but should relatively be stable as imports are not going to be picking up in the near term. So that's my short presentation, and I hope if you have any questions, be happy to take them later on. Good afternoon, and thank you for your time.
Nicholas, thank you so much for sharing that very detailed presentation with us. I'm hoping everyone at home was able to take some notes. We've seen a few questions come in requesting that we share the slides. Of course, we will share the whole webinar to all the participants within the coming days following, so you'll be able to go back to the presentation you've just seen and get the information, because there was a lot to process there. So thank you very much, and yeah, certainly a very very important part we'll be drawing upon later is of course, economic recovery. So really great insights there. And again, we will continue to discuss some of the points that were brought up by Nicholas a little bit later on in the panel discussion. However, we will continue on with our next speaker. We'll try and get through the presentations and leave plenty of time for the Q&A discussion at the end. So our next speaker is OIC Director Lanie Dormiendo from the Philippines Board of Investment. So Miss Lanie has more than 20 years of experience in industry development, international investment promotion and marketing at the BOI. In her current role, she heads the International Investments Promotion Service and is responsible for developing and conducting sector-focused strategic investment promotion activities to target sources of foreign investment. So she leads the team that facilitates queries and business interests from prospective foreign investors through investment counseling, briefing, and information support. So, Ms. Lanie, it's a pleasure to have you with us here today, and we're looking forward to your presentation. So please, the floor is yours.
Thank you, Connor. Good afternoon to everyone, and thank you also to Prime for inviting the BOI in today's webinar. My presentation will cover 3 broad topics: the 2020 investments turnout, industry priorities and incentive scheme, as well as on policy reforms, strategic initiatives to continuously improve the Philippine business environment. 2020 is one challenging year, not only for the Philippines, but also for the rest of the world, as we faced a global crisis brought about by the pandemic. But I'm glad to share encouraging performance in terms of investments turnout for the Philippines. Foreign direct investments to the country rose by almost a third in 2020 to $6.4 billion, backing a decline of our Southeast Asian neighbors and that of the world. The Philippines is among the very few countries which experienced an increase in FDI, as shown in my slide. And on the BOI investment approvals for 2020, our agency continued to reach its target in terms of project approvals. So for 2020, we were able to approve more than 1 trillion pesos worth of investments, or $20.55 billion. Though this was slightly lower than the project approvals in 2019, it remains the second highest level in the BOI's history, considering the restraints brought about by the pandemic. For this year, the BOI chairperson and DTI Secretary Ramon Lopez announced a 1.25 trillion pesos or $25.19 billion target for the agency. My next slide will present the breakdown of BOI approved investments both by sector and by region. So in this slide, you would see the top sector recipients of BOI approved investments for 2020. On top would be construction and infrastructure as the highest approved investments, accounting for more than 55%, or around 557 billion pesos worth of investments. This is followed by electricity, gas, steam and air conditioning supply, which accounts for almost 20% of the total BOI approved investments, followed by transport and storage at 16.13%, water supply, sewerage, waste management and remediation at 2.69%. And it may be further noted that real estate is the 4th top destination for BOI approved investments, with a total commitment investments of almost 33 billion pesos for 2020. On the other hand, the top regions for BOI approved investments in 2020 are mainly in Central Luzon, Region 4A Calabarzon, NCR, Northern Mindanao, and Ilocos region. These regions alone already represented 957 billion pesos worth of investments, or more than 94% of the total BOI approved investments. Meanwhile, if we look at the last 3 years average of DOI-approved investments, the top destination regions are still the same. So Region 3, Region 4A, NCR, and Region 1. However, Caraga will be at the 4th spot if we look at the last 3 years investment approvals for DOI. Now we move on to the priority industries and our current incentives regime. The BOI formulates the Philippine Investment Priorities Plan that identifies industries where investment incentives are given to by the government. Several factors are taken into consideration in transfer knowledge and technical skills enrichment. The IPP is the government's blueprint of priority economic activities that qualify for fiscal incentives upon registration with our agency, the BOI. In the new list, you would see on your screen the new list or the new notable additions to our investment priorities plan would be production or manufacture of essential goods or provision of services relating to the fight against COVID-19 pandemic. Investment that would generate employment opportunities outside congested urban areas, and commercialization of uncommercialized patents on products and services and products of locally undertaken R&D. Aside from these additional activities, note that mass housing is also part of registrable products, as well as other activities such as strategic services, health services, infrastructure and logistics, innovation drivers, inclusive business models, environment or climate change related projects, as well as energy activities. Other opportunities for registration with BOI are export activities, which cover manufacture of export products, service exports, and activities in support of exporters, as well as activities that are eligible for the grant of incentives under the special laws like the Renewable Energy Act, tourism, and energy efficiency conservation. Currently, these are the list of incentives offered by BOI and PEZA, which are both attached agencies to the DTI and are the two national IPAs in the country. As most of you would know, there is now a pending bill on corporate tax and tax incentives, which is called the CREATE Bill. This was already submitted to the President for signature upon Congress and Senate's ratification of the final version last week. And the key features of the reconciled bill would include the reduction of corporate income tax rate, outright reduction actually, upon effectivity of the bill from 30% to 25%. And for domestic corporation with net taxable income not exceeding 5 million, or with total assets not exceeding 100 million pesos, it's an outright reduction of 20%. $50 million pesos, or at least generation of 10,000 jobs. There is also a removal of export and nationality bias for qualification for the grant of incentives, as well as the inclusion of incentive package for a maximum of 17 years for qualified projects under the Strategic Investment Priorities Plan. So I won't go into detail, but you could see those set of incentives in the slide. Several reforms initiatives were also undertaken by the government with an ultimate goal of easing doing business in the country. Some of these would be the Ease of Doing Business and Efficiency Delivery of Government Services Act, which prescribes timeline in processing of business and non-business transactions. The Antitrust or Competition Policy for Philippines, which levels the business playing field by strengthening the legal and institutional framework to combat unfair business practices. The Telecommuting Act, which allows private sector employees to work on an alternative workplace with the use of current technology and telecommunications. And the 11th Foreign Investment Negative List, which allows 100% foreign participation in certain areas. Other policy reforms are also being pursued, such as the Retail Trade Liberalization Act, lowering the threshold requirement to $500,000 from initially 2.5 million US dollars. The other one would be the Public Service Act, which aims to limit the definition of public utilities to power transmission and distribution and waterworks sewerage systems, which would allow foreign participation in other public utility services such as in telecommunications and other public utility activities. Another one would be the Foreign Investment Act, which aims to reduce minimum direct employees from 50 to 15 with a minimum paid-up capital of $100,000. So this is allowing more foreign investments participation in general activities, business activities in the country. As my final message, allow me to reiterate that the Philippines FDI remains steadfast despite the global crisis brought about by the pandemic, experiencing an increase by almost a third in contrast with the decline in global FDIs. The recently approved 2020 IPP was formulated in line with the Philippine government's vision of inclusive growth, technological innovation, and skills enrichment across all parts of the country. The BOI provides competitive incentives to companies whose planned investments fall under the identified priority sectors. We have the CREATE bill once enacted that is expected to boost market and investors' confidence through the rationalization of incentives and to respond to the changing needs of businesses. The Philippine government also continues to improve its business climate through strategic policy reforms to make it easier to do business in the country and to further encourage foreign direct investments. For our investors attending today's webinar, we offer the BOI services to help you as you set up, as you decide to establish business operations in the Philippines, expand and or diversify your business in the country. We will help you make it happen. Thank you.
Ms. Lanie, thank you so much for your very insightful presentation there. As you can see, there are a lot of incentives, it seems, that are being implemented at this time to really help boost foreign investment. So we hope that this can also contribute towards a recovering economy for the Philippines. So again, thank you so much, Mr. Lanie, for your presentation. And actually, I think it's now about time to call on the results of our first poll question that we asked earlier. Which location are you most likely to invest in the short to medium term? So we can see here that the results from the poll are looking like it's a close race between Northern NCR and Calabarzon. So as you can see there, we're looking at 21% to Northern NCR, just edging the rest out. We also have 10% for Davao, 12% for Southern NCR, and 13% for Central Luzon. So currently, likely investment in the short to medium term still remains in the Northern NCR. So thank you everyone who has contributed to that poll. We really appreciate your answers on that. It gives everyone here a great insight into the investors who are here today and everyone else on their potential plans or how they would view the best area for investment to be moving forward. So what I will now do is I'll now ask the second poll question, and once again, please get involved. Please answer the poll, and then in a few minutes time, or 10 to 15 minutes time, I'll come back to this one and we can have a look at the results for this poll also. So the question on the side of the screen: in your view, at what stage is the real estate industry currently at for the first quarter 2021? So a question for everyone out there, of course, especially for anyone within the real estate industry who may be watching today. What stage is the real estate industry at currently in this first quarter of 2021? So again, get your answers in, guys, and we will draw the results from that poll a little bit later on in the program. But we can proceed with the introduction of our third speaker. So our third speaker will now be moving on and focusing a little bit more on the property sector. And our next speaker, of course, is Mr. Cholo Florencio of Philippines. He is a property market veteran and the current VP for Property Advisory of Philippines. He has served a wide array of clients from boutique to market-leading developers, providing property advisory, marketing, and negotiation services. Cholo's industry experience has exposed him to many different sectors of the property market, and aside from project leasing, he also handles advisory services and is currently advising current and future commercial and industry developers. So again, now going towards our real estate industry here in the Philippines. So Cholo will be able to give us an idea of what's going on there with his presentation. So please.
Good afternoon, everyone. Thank you, Connor, for the introduction. I'll be presenting the 2020 market update and the outlook for 2021 on the real estate sector. So we'll start first with the office sector. As you can see in the slide, the 2020 office sector has experienced a lot of challenges. Particularly, the market has experienced reduced demand and a lot of POGO pre-terminations, which essentially brought down occupancy rates in major CBDs to about 90%. In particular, the Bay Area and Alabang has felt most of the impact of the POGO pre-terminations, where Makati and BGC has felt minimal impact because of their strong performance. A lot of movement has been seen in terms of decrease in occupancy rates in areas where there is high exposure of the offshore gaming operators, particularly as mentioned in the Bay Area and in the Alabang area. Cebu has also been affected by the pre-terminations of POGO companies, which brought down occupancy rate to Metro Cebu to around 79 to 80% as of 2020 due to pre-terminations. Davao remains, of course, unaffected because Davao City has very primarily locating BPOs in the area and very minimal online gaming companies. As you can see in the presentation, within the second half of 2020, there has been a lot of interest for companies, particularly the companies in the IT BPO sector, to move outside of the main CBDs of Metro Manila. They started to emerge towards the latter part of the year, and expansions are really brought about by the hub and spoke model, wherein the hub would represent the central office or the headquarters based in the CBD, and the spokes represent satellite offices in fringe areas of Metro Manila and other emerging cities. In particular, we have experienced Quezon City and Clark as two main areas of interest for expansions for hub and spoke model. While occupancy has been noticed to really dip in Metro Manila due to, of course, the slowdown in expansion of office locators, Cebu and Davao are continuously being looked at as primary areas for expansion outside of Metro Manila to really decentralize their operations and move to areas closer to the workforce. Over to the retail sector. Of course, as you all know, foot traffic has been greatly affected, particularly in our regional malls. And we have seen that towards the end of 2020, especially in the middle part and towards the end of 2020, we have experienced a drop in foot traffic to about 80% below the pandemic levels of foot traffic. And interestingly, because of the Filipinos' love, of course, to the brick and mortar establishment, towards the end of 2020, we have seen that there have been some sort of pickup in terms of foot traffic in the malls, most especially because we Filipinos love going shopping, especially during the Christmas season. So in that time, we have gathered that the foot traffic has slight of increased by about 20% less than the usual pre-pandemic figures that the malls are used to be experiencing. So we're very hopeful that this still continues in the first half of 2021. As far as expansion is concerned, we see that 2021 will continuously bring minimal expansion, especially to those players in the retail, merchandising, and amusement, clothing industries. Those that we feel that would be very aggressive in their expansion are the SMEs, which of course would take up a lot of smaller retail spaces in select areas of Metro Manila and nearby provinces. Major brands, of course, due to the uncertainties we are still experiencing, have pushed back their expansion plans probably towards the second half 2021 at the earliest. And we have also noticed that retailers are more focused on relocating and expanding to areas outside of our major malls. They're looking at areas perhaps of like community malls, community formats, standalone locations, and we have experienced a lot of inquiries and demand for long-term lot leases. So this, I think, would continue on for the first half of 2021 and probably even for the second half of the year. On the residential side, we still continue to see reservation sales having mixed impact in the economy, particularly in the real estate sector. A lot of our top developers foresee, at least for them to be able to match current reservations for the year to pre-COVID levels that they've experienced in 2019 and even earlier. Notably, those developers in the residential sector that have a more diverse portfolio tend to fare better as the demand has shifted to the low to medium segment subdivisions in the nearby provinces, as we noticed that a lot of office workers have shifted to the work from home arrangements, thereby increasing demand for these housing units. We also see that future demand would still be in areas in the GMM or provinces nearby Metro Manilas, as these developers would continue to expand their footprint in the nearby areas to accommodate demand that they're experiencing at the moment. Of course, we also see that condos will also be more targeted for the emerging markets, specifically in the nearby areas of the metro. As far as sales is concerned, we have actually done a survey of about 50 residential developers, and about 92% of the respondents have said that they have experienced an increase, or at least have experienced a increased level of sales during the past year. This for us would signal a resiliency, as far as the residential sector is concerned, and a lot of confidence in these developers that, of course, the residential segment, particularly the lower to mid-income, would greatly be affected and increase the demand. These developers remain very bullish and are looking to expand and continue to look for developments, current projects, and start to really think about what to do with their current land bank properties for future development. Moving over to the hotel sector, as we all know, the tourism industry and the hotel sector in particular has also been greatly affected by the pandemic. Since March of last year, occupancy rates have went down dramatically, and on the average, 2020 has brought about 42% occupancy rate for these hotels. This is very far from the normal pre-pandemic occupancy rates of 70 to 80%. And I think a lot of this has been attributed to, of course, the lack of activity in the MICE and tourism industry. Of course, conventions and meetings. A lot of expos have been canceled due to the travel bans that we are experiencing worldwide. Main market for Metro Manila, Cebu, including Davao, were really mostly from the IT BPO industry. A lot of workers were temporarily housed in these hotels to make them closer to the workplace. Aside from that, we've also seen a lot of returning OFWs having to go through the quarantine protocols, have to stay in these hotels. So these have sort of given these hotels a lot of reason, and have given them allowed them to keep afloat in times of very struggling economy in the industry. We've seen that the demand for these hotels were primarily focused in areas near airports and seaports where returning OFWs are entering. For 2021, we see a gradual increase in activities for these hotels in general. We see that as the economy has started to open, these hotels in certain provinces started to open way back towards the end of 2020. So we see this continuing to the first half of 2021 as more cities and provinces begin opening their borders to accept more local tourists. Key tourism destinations in the Philippines that rely heavily on their tourism for their growth, we see them slowly opening their borders and make restrictions a lot easier for these tourists to enter. In the main CBDs, it continues to be a challenge. As these CBDs, we feel that hotels in the CBDs would continue to transition to offering service apartments, to really cushion the impact of the lack of guests in these areas. Moving over to the commercial land sector, we see a lot of adjustment towards the end of 2020. The data shows that what you see right now in this graph is that the properties available for sale, notably, if you take a look closer, BGC and Makati, the main CBDs in Metro Manila, there was an experienced shift in prices of prime commercial land, due primarily to the emergence of properties made available in the outskirts of these areas or in the fringes of these CBDs. A lot of owners have opened this up and opened these properties in the market and offered them for sale. It's also been noted that the lack of prime properties in these CBDs have contributed to the downward shift in prices of these commercial lots. As far as prices are concerned, Makati and BGC still lead at about 1 million pesos per square meter and above. We also see that while rates or prices, of course, owners are still adamant at asking the prices that they're used to pre-pandemic, transactions have really transaction values have really been adjusted, and negotiated terms have really been experienced in the market, as these owners are more flexible now to listen to offers and accept, of course, lower offers, because they realize that the market has been dictating by this sort of movement. For raw land, we see that for 2021, a lot of companies and developers have been, of course, targeting raw land. Acquisition prior to the pandemic, we noticed that a lot of commercial developers have been very aggressive in constructing and developing commercial development. Now, we see that the shift and focus has been to raw land, particularly to develop subdivisions to cater to the demand in the provinces. Survey for about 56% of the respondents in the survey that we've done is that they now prioritize raw land over commercial developments, particularly not only for residential but also for industrial developments. They realize that the decentralization has been happening and will still continue towards the first half of 2021. The industrial sector, we've all known that the industrial sector has been the most promising in spite of the pandemic. This is the more resilient and more robust sector in the real estate industry. And we do understand that due to the limited supply brought about by the demand for prime locations for logistics companies, only 2% of the available industrial space in prime industrial parks are made available. So urgent expansion that we've seen so far are located primarily in the Calabar zone area, where some investors have also been slowly acquiring properties in northern part of in central Luzon, in Bulacan and Pampanga, mainly due to the fact that they are anticipating, of course, the infrastructure developments that are in the pipeline, as well as the development of New Clark City. Industrial prices, of course, have been cost efficient for 2020, as lots have been, of course, continuously been in demand for developers willing to shift. Prices for 2021, because of the speculation, we see a sort of increase in speculative pricing. So 2021, we may see an increase in values for prime industrial lots, particularly in the GMM areas. Current, of course, GMM areas particularly in Bulacan and Laguna, of course, lead the pack in terms of price per square meter. You know, Laguna houses a majority of manufacturing firms based in the Philippines. For outlook, as you can see here, covering all asset classes of the Philippines. Office, we see really softening of demand brought about by a lot of POGO pre-terminations and downsizing of office requirements for office locators. We also anticipate that a lot more office spaces occupied by POGO companies will be made open in the market in the coming months. This will, of course, contribute to a lot more vacancies in the market. Greater Metro Manila is still the desired location for expansion, as, of course, the hub and spoke model is something that we are clearly looking at for 2021 onwards. For retail, we see this is a very challenging year. Similar to 2021, brands have been slowly expanding. They are very putting hold their expansion plans until, of course, they see more certainty. They see more, the economy is slightly picking up. That's the time they, of course, would try to develop and plan their next steps moving forward. The malls also are greatly impacted, and we see that probably towards the start of the second half, we see gradual increase in foot traffic and increase in market share of more community centers. For residentials, of course, we see a continued growth in reservation sales for 2021, at least for the first half, focusing primarily on areas outside of Metro Manila for residential housing development for lower to mid-income sectors. And we see this as a sign that should developments continue to prosper in the provinces, the office sector will continuously follow, particularly, as an example, Davao City and Clark. Industrial, I think we all know the outlook for industrial. Everything has been pointing up with regards to the industrial sector, and we see the continuous expansion movement, and really the industrial sector will really be undeterred by the pandemic. Hotel sector, of course, it remains very challenging for this sector, but as more hotels and more provinces open up their borders to accept more tourists, we see this as a jump starting point for these developments to sort of pick up with their sales, especially the ones outside the Metro Manila. So for 2021, really, Prime Philippines sees the year 2021 as the year of decentralization. Companies moving out of their main offices, main locations to cater to markets in emerging cities. Hub and spoke model has given a lot of opportunities to emerging cities and fringes of Metro Manila. Horizontal housing will also continue to be a trend. As previously mentioned, sales performance will pick up, and as a lot of our employees and workforces continue their work from home arrangement, we see a lot of development in this particular sector. Developers and non-developers are already exploring the option of acquiring raw land outside of Metro Manila. A lot of developers are now shifting their attention and trying to, of course, diversify their assets into investing more on the residential and industrial developments. So expect a lot of movement in these sectors in the coming months. That concludes the presentation for the outlook for 2021 and 2020 update. Thank you.
Thank you so much for your presentation there, Cholo. An overview and some insight into what we can expect moving forward this 2021 for the real estate industry here in the Philippines. A lot of interesting points, obviously, points towards what we're already seeing with a very positive future for our industrial sector, and also hopefully some momentum in some of the other areas as we move towards economic growth further into the second half of 2021. So we will now move on with our fourth and final speaker of the day. And our final speaker this afternoon is none other than architect and urban planner Belino Jun Palafox. Mr. Palafox has 49 years of experience in architecture and 46 years in planning. He was educated in Christ the King Seminary, University of Santo Tomas, University of the Philippines, and even Harvard University. He has lectured in more than 20 countries, as well as founding and managing Palafox Associates and Palafox Architecture Group, which have already completed more than 1,739 projects in 40 different countries. So, among his many awards, Forbes Asia magazine also cited him as one of their 48 heroes of philanthropy in Asia. Quite an amazing feat. He was also recognized by the Professional Regulatory Commission as the 2019 Most Outstanding Professional of the Year in the field of environmental planning, and also led Palafox Associates to be the first Filipino architectural firm cited in the world's top 500 architectural firms in the world. So, without further ado, please let us welcome Mr. Palafox for his presentation, our final presentation before we go into our Q&A panel discussion.
Thank you very much, Mr. Connor Coleman, for the very kind introduction. Can you hear me?
All good, all good.
Yeah, because architects usually present very visual. So I hope I can present now. I'll voice over it. The previous speakers, Mr. Mapa, Director Dormiendo, and Mr. Florencio. I hope all of this will be affirmed in the locational dimensions of all these plans and trends. So the projects we've been doing, we have at the moment about 86 projects, surprisingly, like even hotels, residential, hospitals, universities, a lot of business parks, industrial parks, and the LGUs as well. So 15% of our projects are government, 85% private sector, and we still have projects abroad. And I seem to be more busy during this pandemic than pre-pandemic. And let's go on. Clark Aerotropolis. Aerotropolis city. So we won the planning competition for the master plan of this for a smart city, where we will have the largest airport. So Clark, maybe it also explains why most of the trends for locating developments is north of Metro Manila, towards Clark and Bulacan, because of the airports and also because of the Bulacan airport coming forward. And it's not playing. Maybe I'll just continue talking. If there's technical glitch on the video, the 3D video. Each of these are 3D videos. So Clark, the main zone of Clark is 4,000 hectares. Just to visualize it, Makati is 3,000 hectares. San Juan City is 594 hectares. So Clark, for the largest airport, is just opened, I think, for its upgrading. We divided into 7 districts. The 2 districts beside the airport, more for logistic and so on. Then we have industrial district, leisure district, lifestyle district, and smart city district. And all of these really multi-use. These are just the thematic land uses, where you have place to live, work, shop, dine, learn, and healthcare, with healthcare and wellness centers, and some 24-hour cycle activity centers. And a lot of foreign investors now are coming into Clark. And even the adjacent areas of Clark, I think there's a booming there with new residential and mixed-use developments around it. Because Clark is still 50 years plus 25 years leasehold, outside Clark is freehold. And that's why when I spoke to some of our legislators, they should, if foreigners cannot own land, they should lend them the leasehold to 99 years to 1,000 years. was telling them other countries in the world the lease was 99 years. In Dublin, Ireland, the Guinness Brewery, the lease is 1,000 years. And here we only have, and we architects, we design buildings. I've designed buildings for 100 years. And one building we did abroad, we were asked to design the university, hospitals, and schools to last 40 generations. That's 1,000 years. So this is the Northern Gateway District, close to the airport, north of the airport, airport-driven district, and more on logistics. And hopefully they'll follow our guidelines for green urbanism, green architecture, and so on. Solar roof and green roofs and so on. And all the most of transportation, including starting with walking. So we'd like to see Clark as a walkable, bikeable, and more on public transit. And the road cross section we have been putting forward, just like our projects abroad, 1/3 should be for people, pedestrians and bicycles, 1/3 for trees and landscaping, because it takes at least 10 trees to recover the oxygen and carbon monoxide per car. You can see in here, there's a lot of outdoor dining. And during this pandemic, we've been advising clients that restaurants, 30% should be the kitchen, 20% indoor dining, and 50% outdoor dining. Then we had planned this even before the pandemic, and we were able to address already, I think, the design criteria well into the New World Order, pandemic, post-pandemic. Industrial district, we have that also mostly for light industries. Not many people, there's a river inside Clark, so riverfront development, and waterway supposed to be front doors of development. The smart technological business park. And again, we'd like to bring Clark well into the 21st century to join the first world cities of the world and make it as attractive as possible. The lungs of the city, open spaces. Unfortunately, even Metro Manila, open spaces have been sold. And during this pandemic, we need to build up our immunity. So we need more lungs of the city, more parks and playgrounds and open spaces. Stadtsenberg Central Park and Civic Center. Stadtsenberg was the original name of Clark. We're maintaining the parade grounds. Will be the Central Park and Civic Center for Clark. We're maintaining the old houses, heritage houses, and the tall buildings will be behind them. So all of this will be just like what the Lady Mayor of Paris is doing now, 15-minute city. All your destinations should be within 15 minutes by walking, bicycle, and public transit. The lifestyle district, more of the high-end, even the shops and dining, more high-end. You can see again a lot of outdoor dining. And one of my professors in Harvard, one subject we had was security by design. When there are more eyes in the public realm, less criminality. Criminals are not scared of high walls. Can commit criminality inside, no witnesses. Can throw a grenade across the walls, no witnesses. But criminals are more scared of windows, because behind that window is potential witness. Criminals are scared when there are more eyes in the public realm. So the uglification of our cities, including Metro Manila, because of the solid high walls, it even prevents visual connectivity within neighbors and to monitor the public realm. So this is Clark, about 4,000 hectares. And it can be another urban growth center to decongest Metro Manila. And the next project that fortunately we also won is Pampanga Megalopolis. Pampanga Megalopolis is a megalopolis composed of several metropolitan areas. A metropolis, several cities. Pampanga is 3 times the size of Singapore, 2 times the size of Hong Kong. Yeah, the airport's only 70 kilometers north of Metro Manila. So we themed it, the 23 cities and municipalities, 218,000 hectares. We themed it into several, I call them cities, metropolis, like Aerotropolis, the airport in the city. Then Agropolis, the farm in the city, kitchen gardens, urban farming, suburban farming. Then Ecolopolis, more environment-friendly, ecological consciousness in all the development. And Aquapolis, Candaba swamps, the water in the city. And it will open up the southern gateway to Subic. Because right now, Subic, you can enter only from Olongapo, in the northern portion. and interconnected very well with transportation corridors, multimodal, and so on, and also a circumferential road inside, because in Pampanga, people just passing through, and some of the perimeter towns and cities, you go outside the province to go back to the province. So with the circumferential road there, and there's a called the Golden Triangle, where most of the development's going on now, and very well connected to Metro Manila and Central Luzon and the rest of Luzon. And somehow confirms the previous speaker's trend of locating real estate development right now. And we finished this master plan 2018, so ongoing development now. We still have a lot of private sector projects in Pampanga. And even the transportation corridors, again, it's walking, biking with trees at the side. And I hope we'll be able to influence also the architectural typology with solar roof, rainwater harvesting, and so on. So that building is an intermodal transit terminal, including parking. Even cleaner public markets. We hope these plans will influence again architectural typology and sanitation of public markets. So this proposed building here is a parking and intermodal transit terminal. Very green, sustainable building. You can see the rainwater harvesting and rooftop gardens and solar roof. So even this will also be a bus terminal, jeepney terminal, and parking. And with articulated buses. So the priority is the higher occupancy vehicle. The bus dedicated lanes will be in the middle, the inner lanes with skywalks above, so you don't have to cross the road to go on there. And 1/3 for people, pedestrians and bicycles, 1/3 for trees and landscaping, 1/3 for moving traffic lane. We have been proposing a lot of this in my practice elsewhere in the world, and they follow us more than it's more challenging to get it implemented in our country. Hopefully, Pampanga and Clark will implement the best practice recommendations we had put forward. Tourist information centers to guide people, and again, inspired by indigenous architecture with the indigenous building materials. Pampanga River, it used to be navigable during the Spanish times. We will also heavy dredge and put promenades along the way, and the buildings facing the riverfront. So that's Pampanga Megalopolis. Well, we started with the master plan for Clark, 4,000 hectares, more than 200,000 hectares. A plan for a province. The next one is Metro Davao. 8 cities and municipalities, and we won again this competition sponsored by the Mindanao Development Authority. I say there are 6 kinds of infrastructure. First is progressive infrastructure, international airports, seaports, international schools, hospitals, and hotels. And we propose a much larger international airport for Davao, and 3 LGUs are competing for the location. Because Davao can change the paradigm of tagging Mindanao as backdoor to the Philippines. Developing Mindanao can be the front door to the Philippines from Australia, New Zealand, Papua New Guinea, and from the Southeast Asian countries. So this plan will help to make Mindanao a front door gateway to the Philippines. We encourage the LGUs to, this new tall building should be outside the congested downtowns and CBDs. More walkable, bikeable. Waterfront is an amenity. So make the most of the Davao Gulf, and Davao Gulf is deeper than the ports of Manila and Batangas. So Davao Gulf with the long coastline can have several international seaports, and Celebes Sea south of Mindanao is now becoming a very important navigational route, interconnecting West Philippine Sea and South China Sea and the Pacific Ocean. Davao before the pandemic was the fastest growing economy, more than 8% per annum. And so it's not just politically correct, it's also economically correct, Metro Davao. So we hope cruise tourism will come back. It's so easy to do landscaping in Mindanao, especially Davao. So we have a lot of flora and fauna, vegetation, and so on. Biking, walking, promenading, more eyes in the public realm. Even this kiosk, part of security, more eyes on the street, encourage people to walk. We even were inspired by the indigenous arts patterns in Mindanao, the different cultures of Mindanao. And the night market, we're supposed to elevate it so they don't close the streets at night. Again, the patterns is the arts of Mindanao. Lots of trees, landscaping. Chinatown, urban renewal for Davao Chinatown. Again, environment friendly, walkable, bikeable. Lots of trees and landscaping. Intermodal transit terminal for buses, jeepneys, interconnected with the future Mindanao Railway. And beside this is retail and shopping. Again, the Mindanao architectural typology. Even overhead pedestrian bridges, there can be landscape and activate the areas around it so people feel safe and make it handicap ready and very well landscaped inside. So encourage walking across the streets. The Davao mainland and Samal Island Bridge, we architecturally designed it and hopefully it will be followed. Again, the Mindanao Arts and Architecture inspired with viewing decks, bicycle lanes, pedestrian lanes. Hopefully they can put also larger transit with lanes for trucks and buses and cars. And we elevated it so that in the future even the cruise ships can pass underneath. So the image there is just like the wings of an eagle about to fly, with the arts and architectural images we got from Mindanao. Even the bridge could be a tourist destination. And you walk from Davao City to Samal Island. And Davao is 10 times Metro Manila, 9 times Singapore, Metro Davao, and 6 times Hong Kong. This one is sponsored by Board of Investments. We're fortunate again to have won the design competition, planning competition. Leyte Ecological Industrial Zone. I think this is the first consciously environment-friendly industrial park in the Philippines. And part of our services was the locational clearance. The copper smelting plant there will fuel the global copper industry, and instead of exporting raw materials, finished materials will be here. And job creation, poverty elevation with the environment in mind. We have very good guidelines from the BOI and DTI. And even the locational selection, we were part of it for the poor province of Leyte, the worst devastated by Yolanda. And copper is the best building material for COVID and virus. Easy to clean and so on. Doorknobs, kitchen tops, and so on. And copper for our electrical lines, surgical instruments, and so on. And in Leyte, close by, they also have the geothermal. So Leyte Ecological Industrial Zone. So with BOI, with with Director Dormiendo, they are now encouraging foreign investors to locate there. It will create so many jobs, and we created a growth triangle between Tacloban, Ormoc, and the Lace core area. And I hope we will also be able to encourage more connectivity, airports, seaports, and roads. This is in two towns in Isabel near Ormoc and Merida, two municipalities. So this was a very interesting project. Citizen participation, including national government agencies, provincial, municipal, different stakeholders, including environmentalists, investors, foreign investors, locators, and even the academe. They were all part of this. So it was a very, very interesting, challenging project. We hope it will influence future industrial parks that are more environment friendly in our country. And also, the decentralizing the Philippines. So that's Leyte Ecological Industrial Zone, the first in the Philippines for this kind of project. You can see much more landscaping, more lungs of the city, place to live, work, shop, dine, learn, even worship. And we put like a urban forest within the park. Yeah, that's BOI tagline. We want partners. Invest in Lace. Invest in the Philippines. So we also did the marketing collaterals. The next and last one, another first in the Philippines, is the first PESA registered university campus in Batangas. Again, outside Metro Manila. Batangas State University, they carved out a Knowledge, Innovation, Science, Technology Park. We also designed the 6 buildings that will go up there, the master plan, the landscape, the utilities, and so on. So even foreign investors for research, BPOs, tie up with the Batangas State University. This is another first in the Philippines that fortunately we also won the design competition, including the architecture, interior design, engineering, master plan, and landscape. So we have the knowledge building, innovation building, science building, technology park building, with a hotel and a convention center. It will be self-contained. Again, there was a lot of participation from the stakeholders, including potential locators, and job generation for Batangas, and even the faculty members and students of Batangas State University. His Knowledge, Innovation, Science, Technology Park. It's under construction now. We have inquiries now from other state universities. At the moment, we're doing 5 universities outside Metro Manila. And several hospitals also, because we found out during this pandemic, the Philippines needs, for our 108 million population, we need at least 5,000 hospitals. At the moment, we only have 1,500 hospitals. So this is the proposed convention center. Given the design criteria for this pandemic, natural ventilation, cross ventilation, as much practicable natural lighting, we had considered them. And all the buildings are not just visually connected, but also physically connected. Again, encourage walking, even if you see cars there, walk, it will be a pedestrian precinct. The pedestrian will be priority. And the bicycles. I wish we could show you our private sector projects, but we have to ask permission from our clients. So these government projects are now public documents because they are already approved. So it's shareable. The government agencies also encouraging us to help promote them to locators and investors. So despite the news about, negative news about our country, I have a lot of inquiries from friends abroad. Especially about, I think 2 weeks ago, we were rated by Fitch of London as triple B plus investment rating. There are still a lot of inquiries for foreigners to invest in our country. And they see the tourism. Like the hotels we're doing now, 5 of them, 3 under construction already. They see that by 2024 to 2025, tourism will come back. Thank you very much for the opportunity to share. Thank you.
Architect Palafox, thank you so much for that wonderful presentation. A really incredible visualization of some of the plans that are in the pipeline for some of these areas. So hopefully we can see some of these plans come to fruition in the future. But again, thank you for a wonderful presentation there. So thank you again to everyone who's still here. You can see we have now gone almost 10 minutes over our supposed time. However, we will be continuing on, so please do stay with us as we do have more to offer. We'll probably extend for around half an hour till around the 2-hour mark. So please, everyone, continue to stay with us. Also, we do have the results of our poll again here on the side. So if you remember, previously we asked you, in your view, at what stage is the real estate industry currently at for the first quarter of 2021? And as we can see, it is a resounding result of 64% for early recovery. So 64% of you believe the real estate sector is in the early recovery stage. So thank you again for everyone who gave their opinion there on our poll. And now we will proceed to the Q&A panel discussion. So again, we're extending a little bit over the original allotted time that we had. But yeah, so without further ado, let's proceed to the panel discussion. So we will begin our panel discussion with the first question. The first question we have here, take a look, is, so question 1, how would you assess the performance of the Philippines economy and business sector in 2020? So I'll share this question first. Mr. Nicholas, I think you're on a tight schedule. We've got around 10 minutes left with us. Again, apologies that we've overrun like this. So I'll go to you first. Please, if you could share your insight in just an assessment of the performance of the Philippines economy and business sector for 2020.
Sorry, is this for me?
Yes.
Okay, yeah. Well, basically, everything sort of hinges on the vaccine and COVID response. Notwithstanding, I mean, given all the challenges that we faced, I think the economy did quite well. We did have to do the lockdowns, I feel, just to get a hold of the virus. But yeah, it all goes back to that the public health sector issue of getting hold of this pandemic. But yeah, given everything that we've faced, I think businesses have thrived. One question I get a lot in relation, maybe not directly related to this, but I always get the question, what sectors are doing better, what sectors will progress in the coming quarters? And my short answer to that is it's not necessarily this sector will do better or this sector will do worse. I think it really hinges on a firm or a sector's decision to get into this, what the BSP governor calls the new economy. We have all seen how the sort of entering the digital space is really the way to go. I think the transition to the digital economy has been accelerated by the COVID-19 pandemic. So it's firms that you would not necessarily think would do better because of all the social distancing, but they've found ways to, around all of the social distancing guidelines or the minimum health standards that we're being asked to do, and they've sort of flourished. So I think even in, say, real estate, some people say, oh, that they're going to be facing challenges, but it's just accepting this new economy that we have, and then just finding a way to still be successful in that sector. So it's embracing the new economy, and yeah, I think as we open up the economy, hopefully this year with a good vaccine rollout program, we can get back up to speed as soon as we can.
And just following on from your points, if you had to, I guess, give a prediction, if you could, of any particular industry, I guess, in the short to medium term at least, that you'd expect maybe the most accelerated or has the most potential to grow, which industry would you favor?
Well, yeah, off the top of my head, that would be logistics. I think I was reading some reports that came out the other day. People trying to shift into warehousing because of all the, maybe the mall traffic won't be as heavy even in the near term, but there will still be all these online platforms where you can buy things, or you can DM a message to someone selling on Instagram. All these things will probably take some logistics, your delivery, your inventory, all these things, where to warehouse your items. So I think maybe off the top of my head, that would be one place to look. But yeah, as I said, it's difficult to box these industries and say you'll do better or this industry might not do better. But given the transition to the digital economy, I think logistics and warehousing might have a chance or a good chance in the near term.
Yeah, agreed. I don't think we can be too specific at this time and in predicting. However, actually leads us on nicely to Mr. Cholo. Obviously, being in the real estate sector, following on from what Nicholas has just said, logistics, industrial warehousing and so on, may be an area. You gave some insight in your presentation to this as well. So from your side of things, is that where you're seeing the most growth and potential in the real estate sector? Is it logistics and warehouse?
Definitely, Connor. I'd agree with Nicholas that the sector, particularly the industrial sector, would experience the most growth this year. For in the case of Prime Philippines, we have experienced and we are currently in talks with a lot of locators looking to expand to the provinces with size requirements, probably in the size of 1 hectare and above. And given the scarcity of lots in the metro, in NCR, a lot of developers are also open to build-to-suit arrangements. These are arrangements that are aimed to accommodate the bigger requirements for warehousing, especially for storage for e-commerce companies, like what Nicholas mentioned. Aside from that, I also feel that the office sector will also be affected in a good way, perhaps. We feel that more activity is coming in the coming month, especially for those companies who are looking to expand their satellite offices, as mentioned in my presentation. Companies are also looking to downsize their spaces to save on costs. We see a lot of activity in that area, from probably 200 square meters of office space requirement. They try to move to locations or office spaces which can probably accommodate fewer number of people, probably below 100 square meters. I think It's also worth noting that in the office sector, a lot of companies can also look at the option of relocating to older buildings in the fringes of the metro from grade A office buildings in the prime CBDs, perhaps to save costs. A lot of companies will look into the fringes of Metro Manila, not necessarily maybe to get a smaller space, but also to occupy an older building to save on rent. So I think expanding outside of Metro Manila from their main headquarters and the downsizing are the main things to look forward to for the office sector. And industrial, definitely build-to-suit arrangements in the GMM areas is something that's going to be happening very soon.
Thank you for sharing, Cholo. Yeah, aside from the industrial side of real estate, I believe you're correct in saying maybe we'll see some expansions outside of the usual CBDs, some cost cutting, some smaller requirements in terms of office take-up. So yeah, there's certainly a lot of potential within the real estate industry moving forward. However, aside from real estate and aside from a specific industry, Mr. Dormiendo, what are your thoughts on the overall trajectory for the Philippines in terms of attracting investment? You know, are we still far from pre-COVID economic performance? You know, how do you see this playing out during this year in terms of our ability to get some investment into the country?
Yes, thank you for that question. As discussed a while ago, we still recorded positive when it comes to inward FDIs, comparing our performance in the same period last year. And we also see a lot of improvement in the performance of the economy despite the setbacks caused by the pandemic, as presented by Nico a while ago. While we continue to have a negative GDP growth rate in 2020, we're seeing some improvements, like from negative 16.9% in Q2 of 2020. By the end of the quarter, we recorded negative 8.5%. So that somehow signals economic activities have been slowly recovering as quarantine protocols is. And then we see the service sector, financial insurance, and public administrative and information communication as key contributor to that growth. And some on the investments side as well. So for investments, if you look at the approved investments in BOI, so those are actually investment commitments that are expected to come on stream in a year or two. So you would recall in my slide, most of this would be in construction and infrastructure, as well as in transport and storage. But most of these are local investments with some participation of foreign investments, mostly in manufacturing.
Okay, thank you so much for your answer there. Right, we shall carry on straight away to our second question. As I say, we're already way over time here, so I will move on already to the second question. I'll go straight to you, Mr. Architect Palafox. So how would the country's metro areas fare differently compared to emerging cities and provinces in terms of attracting business? So what areas do you see? What emerging cities do you see? How do you see them faring against the Metro Manila in terms of what you're looking at for your projects and the demand you're seeing? Is there a specific area that again,
Yeah.
you show a lot of plans for Davao and Clark. Is that where you're seeing those?
Yeah. In fact, most of our, not just planning projects, but architecture projects, from Ilocos to Zamboanga. Ilocos right now, Ilocos Norte, we're doing the Tourism Master Plan and Physical Development Plan. Vegan just hired us also to the land use plan. Vegan. La Union, we are a hotel under construction that we designed. I mentioned a while ago, my daughter, daughter, up a clinic in Siargao, making more patients than Makati Medical Center, where she has a clinic also. Our offices, Makati, Cebu, Davao. Our Cebu and Davao offices, 75% of our employees are going to work. Whereas only 10% of our employees are coming to work. And by 2050, there will be about 140 to 150 million more Filipinos. We need 100 new cities. Otherwise, our existing metropolitan areas will be as congested, if not worse than Metro Manila today. A lot of opportunities going on. And if I mention, so many of our clients were contrarians. He was buying properties along EDSA when people were demonstrating. Jan Gokong Way, he was buying properties in EDSA. Robert Cook of Shangri-La, they were buying properties in EDSA. And then we did case study. I also took up real estate courses aside from architecture and planning in Harvard. We studied the past 200 years of real estate. Downward is 3 to 4 years. Upward is 7 to 11 years. It was only interrupted by the 2 world wars and depression. I don't know if we are in the depression mode right now, but Europe, after the pandemic of 1917, 2020, Europe and the Americas, we had the rolling 20s. So 3 years from World War I. And even the 9/11 did not impact so much on real estate. Yeah. Thank you for the opportunity to share. And one more, the richest man in Hong Kong, you might know it, him. He was buying real estate when the students were being massacred in Tiananmen Square. At Vancouver Expo, he was the only one who bid Vancouver Expo and told his compatriots in Hong Kong that China over better go to Vancouver. So they call that district in Vancouver now Hongkover or Vancom. Yeah. Thank you for the opportunity. So these are outside the box thinking, contrarian thinking. I think my clients now, the hotels and so on, they're contrarians because when you plan design a hotel, it takes at least 4 years. So by 2024, I think we'll be okay. Thank you.
No, thank you. Thank you. Yeah, sorry, go ahead.
Connor, I have to. I have another Zoom call I need to get on right now. I do apologize for me leaving. I'd like to thank the rest of the panel and Prime and all our attendees for joining us. Stay safe and we'll look into a better economy ahead. Thank you.
Thank you also. I meet the mayor from Talisay Negros. So again, that's outside Metro Manila. My 4 o'clock meeting. Okay, thank you very much.
Thank you.
Okay, so thank you. I'll start with you, Cholo. So we've discussed already the decentralization. So where do you think the next development is going? Do you think there's a specific area that we'll be looking towards in terms of, is businesses, firms, BPOs looking at a certain area for this decentralization?
Well, yeah, thank you, Connor. Similar to last year when all these started, I think it's the GMM areas are still the priority locations for the BPO companies who are looking for satellite offices. Primarily, these are the locations where they would be closer to their workforce, and emerging markets, emerging cities would be the priority. I also think that among other asset classes, residential and warehousing would continue to expand nationwide. particularly in the main metros of the Philippines, Cebu and Davao included. We've had a lot of inquiries and are talking to a lot of logistics companies who are very, very aggressive in their expansion in Davao City as well as Cebu. And residential, I mean, of course, as mentioned a while ago, a lot of companies are really very, very aggressive in the lower to medium segment of these subdivisions. And I think the key here is really if you are a developer of commercial or office properties, it's about time for you to really think about diversifying and looking into other forms of development to really maximize the opportunity that the industrial sector and the boom in e-commerce is bringing the country at the moment. So yes, nationwide, of course, in industrial and residential, and the key is really to really look at other opportunities in other asset classes.
Thank you. Ms. Dormiendo, we'll finish on one final question for yourself to round off today's webinar. So, kind of following on in the same vein in terms of emerging markets, if you would, what is your insights into the investments? Has there been an influx into investment in emerging markets and other areas outside of the usual hotspots of Metro Manila?
Honor, sorry, I lost you.
Hello, okay. So we're just talking, I just wanted to follow on quickly. Earlier you shared your insights on the business investments of the Philippines, but specifically, what are your insights on the influx of investment into the emerging areas, the emerging markets of the country? Is there any sort of influx you're noticing or trends?
Yeah. If you look at the investment approvals, at least by the Board of Investments, we note that investments in the capital still remained high. It's around 10%, more than 10% on average. But we're looking at higher investments outside Metro Manila, placing Central Luzon and Region 4A as key cities for investments, mainly driven by, as I mentioned, investments in infrastructure, power projects, transportation and storage, and some real estate development. So I think this trend would continue, especially with the government's policies also in encouraging investments outside Metro Manila. An example would be the Balik Provincia program of the government, which aims to boost countryside development and addressing congestion problems in urban cities. In our investment priorities plan, we also provide incentives to activities that would generate employment opportunities outside congested urban areas, as I mentioned a while ago.
Okay, perfect. And so I think we shall end it there for today. So I hope that all our attendees watching got some valuable insights, the overview on obviously some of the events from 2020, what we can expect from all the different sectors in terms of economic performance, business development, and so on and so forth this 2021. Again, we've had a lot of requests to send the presentations and whatnot. Everyone who's joined us for today's webinar, we will contact you in due course and provide you with all the information shared today, because there is so much fantastic insights from all of our guests today. So we will be sure to follow up with that and send you a copy of the webinar and any of the information that we can. So I would first like to say thank you to Cholo and Ms. Dormiendo, of course, our two remaining speakers today, of course, as well as our other speakers who have already had to go and continue on with their business schedules, Mr. Nicholas Mapa, and of course, architect Palafox. And of course, everyone who's attended today's webinar, thank you very much for joining us. And please stay tuned for our future webinars. Of course, this is the first Prime Philippines webinar of the year. There will be more to come, so make sure you watch out on our social media channels for updates regarding that. And of course, do feel free to reach out to myself or any of the guests, the speakers today, with any questions you may have, or come through me and the Prime Philippines team, and we can do our best to answer any follow-up questions you have. Thank you for staying with us. Thank you to our two remaining